money at a cost quite right.
Kate, how does, again, the market kind of interpret all of this? And again, we're looking at stocks having a decent rise, but this is coming off a huge crash that we'd seen in February and March.
Yeah, I think Glenn and the rest of the panel have made a great point. You know, there are so many variables in predicting economic growth.
That does for the sale. We're trying so many different things with this. Good morning, everybody. Hopefully, you guys have got the sound now. I know I've got a little delay on the chat. Frozen video. Maybe it's there. We go. All right, I'm going to take off running here. One of these days, I'm going to find out where these Vimeo people live, and I'm going to go get them for your sake and for mine. So, looks like everybody's in. We're all loaded up. How about that jobs number? Jobs number 14% shows a 14% unemployment rate. Actually, there was a little bit of a catch here as I was just getting ready to go on. And maybe I'll have a little typo in the PowerPoint simply because they were changing things. But it was 14%, but they're also talking about how they think it could have been. There was a note in the actual report from the on the jobs report that said that it should have been about 5% higher. So maybe there's an asterisk on this 14%. Let me go ahead and get to the, since we're already a couple minutes behind, let me go ahead and get to the charts here, or the slides for the day. Today's job report, obviously something we're going to cover. Then I want to talk about the re-entry correction. I'm going to call this the re-entry correction. I'm still referring to it as the irrationality rally, but it really is a little bit of a correction to the upside here for the re-entry, and the market's starting to get in front of hopefully the economy, but hopefully not too far. Based on the discussion there, I'm going to give you two long-term split market stocks, one bull, one bear, because that is what we're in. We're in a split market, one like I've never seen. I used the word bifurcated yesterday during my 11 o'clock live chat, and I think that's really the situation that we're looking at. And it's, to give you an idea, a little bit of a hint, it's tech versus normal, or let's say industrials. We'll put it in that category. We're going to check in on the oil trade one more time. I know this is getting maybe a little repetitive for you, but it's an important trade, and mostly importantly, it's a trade. I mean, the fact that there are a couple trades in the oil sector right now is great, because if you look at everything out there right now, we're kind of in a phase where the technicals are in this wishy-washy 20-day, 50-day fighting it over. Stocks kind of getting squeezed in between them. But in the oil market right now, because of this incredible rally that we've seen over the last month, we are now in a situation where there's actually some clear trades, and we're starting to come off of the idea that it could be an oil market that's going to start trading on some fundamentals here, which is not great, because the technicals would suggest that things are ready to go down. So let's go into that. And then, of course, I'll give you some headlines that you want to watch this weekend. That's kind of a little bit wishy-washy. That one's going to be a little light. That's the light work. All right, so 20.5 million jobs lost in April. This is hot off the press as I was typing into the into the computer as the numbers were coming out. The unemployment rate moves from 14 up to 14.7. That's a 10% increase in unemployment in 1 month. That's not worse than what we saw in the Great Depression, but the lines are already being drawn that you cannot compare those. You can compare it to after World War II, and we actually took that increase out, but it'll be something that the market digests. Now, what they're saying here is that at 14.7, there are people that were already working at home for reasons unrelated to the coronavirus or the COVID-19. And so when you include those people that are now considered also unemployed, that number goes up an extra 5%, which would put it at 19.7. So it would be closer to that 20 to 21% that everybody was looking for in terms of expectations. Expectations for 21.7, I think, is the number that they were actually looking at. So this is a situation where I think some reading is going to be done, maybe a little bit of conjecture in that report that has to be pulled out. But futures spiked before. We saw futures on the Dow trading up around 220. Now they moved up another 80 points. They were up a little stronger, then they pulled back again. We'll see what's going to happen over the next couple of hours. Obviously, the first response, if you're not familiar with this, the first response, and call it the first 2 minutes of the trading on any report that's done like this, especially the jobs report, are the numbers, or the algos that are trading it. The computers, they get the headlines, they instantly just turn it into a bullish or bearish signal. And that's why you see them going up so quickly. Usually it's about 2 minutes, and then you'll start to see a little bit of a fading. That's the algo, you call it the algo effect, when all of a sudden you see this huge amount of volume driving either higher or lower. And then you get more of the human aspect of that afterwards, after the algorithms have had their turn in line. That's why it's so important that all these companies say they need to have servers that are right there next to the exchanges, because literally it's nanoseconds in terms of that response time. And that's why you see that immediate rally. But what we'll want to watch today is where not only the Dow is going to go, but most importantly, the comp. The comp is actually putting a little more, a better return. Think about it here. The NASDAQ composite, and this is where the split market discussion starts to come in. The NASDAQ composite has less in terms of an effect on the unemployment report, because a lot of these people were already working from distances, or they're working from home. I mean, the technology sector is well known for this, so a lot fewer people that are losing their jobs in that area. It's more of the industrial government jobs saw a huge drop. Huge, more than 1 million jobs dropped in the government. So at this time, I think we're going to want to watch how the Dow reacts to this instead of the NASDAQ over the day. And again, who knows where we'll be trading at 4 o'clock. The last 2 days, we've seen the market try to pull back, into the close. Yesterday, not as successfully as it was Wednesday. Wednesday, we actually saw stocks go negative as we moved into the close. I think we'll see a market that'll probably be flat at where it is right now, up 300 points or so, given the close. Sentiment. Let's talk about sentiment. Sentiment is now clear that investors are discounting the market's value to show basically that the data points that we're seeing now, the jobs report that was just released, the unemployment claims yesterday, and the COVID-19 data, whether it's deaths, whether it's new cases of the COVID-19. So all of this data that is backwards looking, people are looking at it and saying, well, and that's hindsight 2020. We know the data that's there. If you look at some states, Arizona right now is experiencing a pretty good increase in both the deaths and the new cases. So they're looking at this data and saying, well, the worst is gone, so let's go ahead and buy everything right now. And one thing that is different there is this is the difference in looking at the situation or the cause, I guess you could say, and then the effect being what's going to happen to the market as that economic ripple continues to go through. So sentiment is clear that everybody's looking at this saying, okay, if COVID-19 is done, then the market should be up. Instead of if market if the COVID-19 is slowed, not the effect of what's going to happen. If you look at like what happened in Texas, and this is very interesting, they had pictures all over the news last night of the malls, and the malls are opening up. Simon Property Group has opened up, I think, 49 different malls. And if you look at this, the Simon Property Group is opening the malls. They showed the pictures yesterday. They've got them roped off, food courts closed. Lots of the stores aren't going to reopen. That doesn't count the stores that are going bankrupt. That is that ripple effect on the economy that is not being taken into account. Now, quite frankly, I've been talking about that for, I don't know, a couple of weeks here during the irrationality rally, saying that this just doesn't make sense. And historically, I've been able to look at I lived through, the financial crisis and went through trading that in 2007, 2008, 2009. It was completely different. We didn't discount the market as quickly to show this V market recovery, when in fact, the economy was going to have something more of a L-shaped recovery. So in other words, what I'm trying to say is that this market has kind of evolved so much that they are looking at the market and saying, okay, this is where the market should be in 6 months or in 9 months or in 12 months. And I'm worried about what happens between now and the next 3 months, throwing a wrench in that call or in the machine there. So one of the things I'm trying to tell you is that at some point, and today may be the day when we break above these 50 days, that you just simply have to go with the flow, as stupid as it may seem. And right now, this does seem irrational. But at the same time, it's important to keep those hedges on, those long-term hedges. So those night trader subscribers out there that are listening to me right now, we're going to be adding a little more. And we went over a list of bullish stocks yesterday. I've got a nice long list right here of stocks I was up until about 2 in the morning. You can't see that because it's too bright. But stocks that I was up until about 2 in the morning going through the charts and saying, okay, today is such a critical day for the market. Here's my bull side. Here's my bear side, and I just need to go fishing on one side or the other and start to take that directional move. And that's why we've been holding back for the last couple of days in terms of trading. But keep that in mind. I like that the table pounding is coming through. It's like a teacher in high school trying to get my attention. I'm not trying to get your attention, Ron. But keep in mind having this split type of approach right now, because the market, the irrationality, it looks like, is going to continue even in the face of somewhere around 20% unemployment. Let's get back to the charts here because I want to get you through this. I've got a couple of different, and this is going to be something interesting for you given that. And let's pick it up right from that bottom line. The real question remains: the market's V is in front of the economy's L's. And that's a great question. You know what, Matthew, we've got, 300 people that are tuning in right now. And I don't know if there's a way that I could actually get this going right now. But if there's a way for us to have a poll that says, are you bullish or bearish? Oh my gosh. Hold on a second. And here we go. Bingo. I can't believe I figured that out that quickly. So, you're bullish or bearish? You think the market's going to come down 10% over the next 3 to 6 months? That's another way to look at this as well. I'm interested to find out how you guys are polling. And look at this. It's already 69.30 on the bearish. I mean, this is actually an interesting little idea, and I'm glad that I thought of this on the fly. One more. I'm hoping that I don't have this is live TV for you guys here. I was saying that I noticed one of my typos, and I don't want that to count against my Dairy Queen tally here. So here we go. Ready? There's one more for you. I like this. So let's get back to where I'm going, because I got a little shiny object, or I just created a shiny object for myself here. So we've got now, if we look at this, the real question remains: the market's V is in front of the economy's L. How do you trade that? You turn this into a split market trade. You turn it into something where you say, okay, I've got to put stocks on one side of the tablet and the other. And you think about, when you're doing this, the re-entry correction. So stocks are now trading about 30% from their March highs. The NASDAQ 100 is trading slightly higher than the S&P 500. Obviously, everybody made a point of saying yesterday that the NASDAQ has now erased its losses for 2020. But when you look at the charts, you know, the S&P's up 33% or so, and the NASDAQ's up 36%. The NASDAQ is outpacing in terms of relative strength here. So it's clear that you've got NASDAQ, and for good reasons. Microsoft, NVIDIA, Intel, some of these companies just aren't going to go away. Apple, and they're going to continue to churn through whatever economy that we have, especially if it's a little more of an online economy. So the focus on technology suggested the recovery is less robust. And what I mean by that, folks, just so you can understand what I'm trying to say with that, is typically when we meet being quants, analysts, whatever you want to say, look at the market. I look at the correlation of the S&P 500. The S&P 500 is the benchmark, as well as that against small caps, technology, large cap stocks, industrial stocks. So I want to see how everything's moving. Right now we have less correlation. It's hurting caps right now. Financials are going down. Technology's going higher. You've got oil that's going higher, but that could reverse, and you'll see how that's going to reverse here in just a couple slides. But you've got all of these things, again, these cats running around, instead of everything going up very nicely. In a typical recovery, you'll see everything that is, let's call it risk-based, or something that growth-based, even, we could use that term, going one direction, while the safety trades go the other direction. Bonds, utilities, REITs go down, and you've got equities, technology, healthcare, financials going up, usually being led by financials and technologies. Now you've got financials and technologies converge or diverging, going different directions. That's not a healthy pickup in terms of a rally, but as you can see, it's a rally. So you've got this less robust rally, but it's nonetheless a rally. So the question becomes, are we dealing with a split market for the remainder of 2020? And if so, you know, how do we handle that? And I think that is a huge question that everybody is not talking about, because it is kind of, the market's going up, everybody's making money. No, the people who've owned Zoom, the people who've owned Chewy, the people who've owned Trex are making money. The people who are owning, you know, Boeing, not so much. So I've got two stocks for you real quickly, and I've talked about both of them quite a bit. And this is kind of a rehash, but I just want, when I talk about your stock portfolio for 2020 to 2021, it's the portfolio that you're building now that is going to go all the way through 2020 as a defensive or a growth portfolio, regardless of the market conditions. And it's going to carry you through 2021, when we'll probably have a more robust economy and a more robust recovery. So JD.com is at the top of the list. Last night when I was putting this list together, I thought to myself, you know what? Online services, there's got to be a company out there. JD.com gets above the Amazons, and Amazon is certainly on that list, but JD's lesser known. JD trading at $45. We just bounced off of that 50-day, which is a nice little opportunity for everybody to get into it. All my studies show when you bounce off a 50-day with a little bit of volume, as it saw, that's typically when you get that blasting cap type of activity that comes off. So there's a blasting cap under the stock that really shoots it higher. Shot from 42 to 45. It's headed back to 48. I think the stock hits somewhere around 55 before we see the next quarter really start. So you've got a couple of months to do that. It might be choppy, as we've seen here. You know, you've seen some chop, but also there is the March bottom for JD.com when it traded at 36. It started the year at 35. So it was still making money when we were at our lows for the pullback. And if you look now, it's still making money, obviously much more as it continues. Watch that 50-day trending higher, the 200. JD.com is a perfect stock to put into the portfolio for the 2020-2021 investor. So, and if you haven't seen it yet, check my other poll I just put up. I'm not going to put too many of these up, but do you think the market's going to drop 20% in the next 3 months, or the next quarter, so to speak? Give me some votes on that, because I want a little more robust than 6 votes. That's not fair. Anyhow, JD.com is on your bullish side of the split market. On the bearish side, and you can beat this horse, obviously, until it tries to go across the stream, but Boeing. Everybody thinks that the worst is in there for Boeing, but obviously they are still dealing with not only their issues, and they certainly are their issues, but you've got an economy that is now changing in their industry dramatically. If you've seen the new pictures of the plane configurations that they're starting to float around and say, this is what you're going to see planes looking like, it all affects what Boeing is doing. And they haven't even gotten to the point where they can get these planes off of the manufacturing floor here. So Boeing right now sitting at 120. It's a stock that people have been trying to buy at this bottom. Quite frankly, I've looked at it and said at 120, I think that it was maybe a decent buy to hold for the next 5 or 6 years. The more I've looked at the data and the fundamentals, the less I believe that to be true. And I think that once it goes through that 120 mark and we continue to see, and this is truly an economic stock. So JD is more of a tech, and it's not necessarily drawn to the economy as much. The economy has a direct target on Boeing's back, whether it does well. And if people really think this economy is going to do well, and that's why they're voting the market up, then Boeing should be a good buy. But right now, I think that's not the case. It's an L-shaped economic recovery, and Boeing is going to break down below $100. It's one that you want to stay away from adding to the portfolio, I believe, right now. And I think that, if you're aggressive towards it, come on, give me a few more votes on that poll on the market drop, please, people. So wake up, everybody. Chop, chop, class. So anyhow, watch that 120 mark as it breaks, because then I think that we see the market start to head down and break down past that 100, which was the lows in March. Let's look at a couple of the questions. Just take a second. I saw some about, call option on JD.com. That's the way you play it, Andrew. If you don't want to play the stock itself at $45, though, I think that it's actually not a terrible thing to be buying with the stock, and then use a cover call strategy on it and generate some extra income off of JD as it continues to go higher. You go 5% or 3% out of the money every month or every couple of weeks if they have weekly options, and generate some income off of it. That adds up to another 5 or 6% if you get aggressive with the cover call strategy, and you've got the stock, and the worst you have to worry about is it gets called away, and then you sell a put, and when it comes down after you got called away, you're right back in, and you collected a little bit of premium. So there's a nice little strategy if you look out over the next 12 to 16 months, maybe even 18 or 20 months of what you could use with JD.com. Same thing could be said for Boeing. You can buy the stock and sell calls if you really wanted to hold the stock and sell calls and try to make some premium on it and collect their dividend. But obviously, I think there's some concerns over long term. What's going to happen when that dividend comes up for payment? I think they're going to have to twist that a little bit. Let's move on, because I'm already at 9:13 here, and I got to get you ready to trade. Crude trade is all about the technicals. I've been talking about the crude trade and showing you the 20-day and the 50-day. Look at what's happened here. We shot right through the 20-day and went straight to the 50-day in one day this week, right? And now we've been trading and not being able to break below the 50-day. WTI futures are trading up. I think it's 1% right now. So we'll get back up towards that 50-day and maybe press on it. But right now, I think we need to look at the fundamentals coming back into play, and whether or not, because we're going to ramp right up to another month's worth of those contracts starting to expire here in a few weeks. And when that comes to play, oil is going to be the focus, and it's going to turn back to demand. Oh, you can't see the polls. Do I have to hold that up? I'm not sure if I have to hold that back up or not. I'm going to leave it like this and say, show it again. There you go. Oh, my gosh. So there you go, folks. So let me continue on my oil trade here. So I think that as we get closer to that situation where you're going to see those contracts starting to expire, the focus is going to get put back on supply and demand for oil. The demand is not there clearly right now, and I think that you're probably going to see that question start to push WTI prices lower again. That'll happen within the next week or so. The technicals are just going to be a catalyst here for it that are going to help it to move lower. So what happens then? Well, the technicals, and I'm going to leave the poll up because you're not going to be able to see it. It turns into a trade on the XOP. The XOP is the only sector really in the oil area that has taken off here, that has really taken off. When you look at the XES, when you look at everything else, it's not seen the same production. In terms of movement. We've seen the XOP go from 30 bucks to 50 bucks here in the last month or so as everybody's focusing on that oil trade going higher. So the exploration and production companies going up, which makes sense. Those are the guys that get paid for pulling it out of the ground. So this is the sector right now that is ripe for a trade on the crude side. When I looked at it last night, Cabot Oil and Gas. And the reason, let me tell you how I came up with these, looking at not only the technicals and your breaking of the 20-day here on Cabot here recently, but also the consolidation after we hit an oversold or overbought reading. And of course, I have to come into play with round number, the $20 price here. We saw that actually push the stock back in March as we saw things fall down. I think you see Cabot Oil follow the same trade. You got it from $20 down to 17 bucks is the move right now. So around 16% that you can get out of that trade. And I think it comes in short term. So this is a put on Cabot Oil and Gas. The second one that's very technically ripe for a pullback right now, EQT Corp, the ticker symbol EQT. $14. It's been consolidating after seeing that overbought when we hit 16. The stock's not been able to go up any higher despite the fact that we've had volume that's been remaining relatively healthy. You're breaking the 20-day here as well. $14 isn't as much as a round number that I'd be worried about. The 20 days of break here, you've got the confluence of the 200-day and the 50-day here, which is going to act as a automatic magnet for the stock to go down to. And again, I think this happens as soon as we see some sort of weakness in the oil trade. When you go back to that WTI trade, I'm going to take this down for just a second. When you look at that WTI trade, trading right at 50, the 55, I went to the XOP, my bad. When you look at that WTI trade, it's trading right at the 25 level, breaking through that with the 50-day, pushing down on it hard. That's why I'm looking at this as a catalyst for those two companies, Cabot and EQT, to actually see some short-term weakness. A nice little quick put trade idea for this market that I think makes a lot of sense. Let's give you another chance on the bullish or bearish for 6 months here real quickly. Throw in your votes if you didn't throw them in before. Cabot Oil and Gas, EQT, your two short trades right now. As I say that, I move into the last part here. And I'll look at a couple of the charts here in a second. If you give me some more votes on that one, I'll switch over and pull up the stock charts, and we'll look at 3 of the stock charts that I'm sure everybody has put some submissions in. This weekend's going to be all about the headlines. Last weekend was all about getting ready for earnings. China talks return to the #1 spot on what we should be watching here. Everybody's going to be talking about the talks that are supposed to happen on the phone. They're going to get on the phone and play telephone game just like we used to do in high school and figure out whether or not they're upset with each other, the administration, the trade administration here, and China's envoy as well. And that is going to be the #1 thing that everybody's going to be watching as we head into the trade next week. Earnings, we're seeing our second heaviest week of earnings next week. So look at what happened this week. We got a ton of earnings, and the news was good, except for the fact that nobody gave us any type of let me get rid of that, any type of guidance. We've lost all the forward guidance on the earnings right now, which nobody seems to care about because the market's figured out that the guidance is actually positive and the economy is okay. Right now, next week, as we head into it, it's going to be another round of a lot of industrials. You're going to see some food service companies, a lot of getting into the nitty gritty of the earnings season. And I think that's going to give us an opportunity to really see how the economy is affecting some smaller groups of the subcultures or subcategories of the economy here. So I think we wait and see that. The other thing is there are some travel affected earnings coming out next week that I think we need to look at and watch closely. It's very interesting what you're seeing going on right now with Royal Caribbean and Carnival Cruise. Reading up quite a bit on them. I was up until 2 or 3 in the morning last night reading this stuff. There is a little bit of backlash right now. Communications, we're going to see some communication companies next week. It really is a hodgepodge of earnings, so it's not as focused as what we've seen the last couple of weeks here. And I think that takes a little bit of the focus off of it. So we're going to be watching China headlines. I'll be talking about them Monday morning heavily. And I'll talk about a few of the earnings, but the technicals are also going to be the thing I'll be talking about Monday, because today is going to make a big determination on what we're going to see, whether we're breaking higher truly at the close and we need to follow that trend, or whether you start to see a breakdown in that confidence and we move lower. There has been no confidence as based on the volume, with the financials continuing to go lower. It's a big question mark. Let's take a look at, I'm going to grab just, this may be fair, this may not be fair. I'm going to grab the first 3 ticker symbols and hit those for you real quickly. I'm going to use the stock chart since I don't have the e-signal up and running yet. Try to deal with me as I try to make this quick and not try to upset the Vimeo gods by doing something a little bit irrational and trying to put up some, start loading companies onto or programs up while I've got it going. Beyond Meat is the first one I saw, and that's from Gary. Is that an Arizona shirt in that picture you've got there? Beyond Meat, good earnings report, jumped up above the 200-day moving average. This is one where we've seen a little bit of a slowdown in the company. It's been trading in a range. I think you pull back within that range of the 200-day and the 50-day. And probably it's going to be a market beater here, because obviously you've got some problems with supply chain, and the problems I think are being overstated, at least from my walk down Main Street here over the last couple of days. David, I'll get your question here in a second. I'm able to find meat almost everywhere I go, chicken and beef and all of that. I know there's shortages out there, but I think that that's going to come up very quickly. Everybody was looking at Beyond Meat saying that they're actually going to be that substitute, and it's really not going to be a substitute. Now, the thing I will say is that they're making money faster than everybody thought they were going to be making. It's still a very small company, though, and I think it's still just a very flashy company. Not flashy as in there's nothing there. I think it's just something they have to start to figure out how to expand and make the company larger than their market cap is right now, before you start to get a stock that's going to take off and start to match the expectations that we saw when it drove itself up to $230. So Beyond Meat right now, if you're holding the stock, I think you continue to hold. I don't think you buy it at 120. I think you let it come down to 100, maybe even $90 before you buy it again. Cabot is, there you go. Everybody's helping out. I love it. EQT is the other one that I mentioned. Ollie's is one that I'll put up there. We've got a position in Ollie in the night trader right now. It's been pulling back. Started to see a bump yesterday off the 65 level. Everything from a technical perspective is in line on Ollie's for us to be able to benefit from it. Let's see if I can get a pre-market on it. Nope, no pre-market trading on it right now. So we'll see how it trades here in about 7 minutes. I think you're going to see Ollie's run up towards that $75 level here if the market really does break free and take off again. This is really going to be one that, again, they're in a sweet spot. Discounter that is buying up inventory as these other retail stores are starting to open up and get out the duster and clear off their inventory, and they're busy. Everybody is in their stores and they're shopping. NCLH, we all know who that is. So another one that's interesting, and this is part of my late night reading last night, is the fact that all of these ships are now sitting off of the shore on their private islands that they own for their excursion reasons in the Caribbean right now. They've got like flotillas where there are 30 ships in 10 or in 3 different groups that are just sitting there all together doing the same thing. These companies are not going to return to normal. Right now, the date is August, right? They're not going to return to business, at least expect to return to somewhat, not even normal business, but just where they can start up a ship and put some people on it. August 1st is what Carnival Cruise Line says. But I think that they're priced for that right now. I think that they're going to trade between the $12.50 and $10 in Norwegian Cruise Line's case. Maybe you see a spike up to 15 that actually goes, gets up to 15 on some sort of good news. It's going to pull right back to this range that we're seeing it set itself at. This is what I'm going to call the idle speed for Norwegian Cruise Line. And that's a pun on it. If you drive a boat, you know what I mean. Here's the idle speed for Carnival, right around $12.50. So I think you're going to see them sitting at idle speed, just trolling across the bottom right now. Every once in a while, they're going to have a blip, but it's not worth buying over the long term. It's going to be worth shorting. If I see either of them go up 10%, I'm going to short them because they're going to come back to their idle speed, which is $12.50 a share for Carnival and about 11 or so on Norwegian. So that's how those sit. I'll look at one more. Nathaniel's asking about the VIX. The VIX is, and you can send any of your questions in if you like. Obviously, mention me when you send it in so it can get to my inbox. They'll matriculate it down to me. The VIX sitting at 30. Right now, it was showing pre-market. The VXX was showing us being a little bit lower, 29. Watch the VIX at 30 today. That's been my line in the sand right now. If we hold this 30, it's going to be, I think you found a VIX that's going to rest between the 30 and the 40 range for a little while here. That's going to be the new market norm. We're not getting down to 12 for any time soon, but anything unexpected or a market that comes back down again, if we start to see the market push back towards the break even or even into the red for some reason today, then you're going to see the VIX move back up to 35, close above 35, and start to make a move towards that 40. So you've got 4 minutes to get ready for the market to open. I've only got 4 minutes ready to go to open. Good thing I sat around and put my list together last night. And I'm really loaded up on both sides. I can go either direction. I've got choices, about 20 of them. Night trader people, I'm going to see you at 11 o'clock. We'll talk about this list because that's what it's for. It's for you guys. Wish everybody the best trading success. I'm looking forward to seeing you on Monday. Sorry we had a little bit of a slow start today. We'll get to more of your stock charts on Monday. Maybe we'll do, I don't know what you call Free Flow Friday from Monday. We'll think of a kitschy name and I'll call it that. And hopefully everybody will have a good time. Speaking of good times, have a great time this weekend, please. Get out, enjoy yourself, get some fresh air, walk the dogs, do whatever you do to make yourself happy and those around you as well. But be safe at the same time. Socially distance, etc., etc. Otherwise, I'll bang the table at you on Monday if I hear somebody was acting out. All right. Have a great weekend. I love talking to you guys every morning. Look forward to it next Monday. We'll go through some more of your ticker symbols instead of mine, but I also like to share mine as well. I wish you the best trading success and look forward to seeing you next time, guys. Have a great trading Friday. Go out there and make some money. All right. Bye-bye.